And we're getting some earnings that are flashing for you on the screen. Rather small company, Goa Carbon, but on a year-on-year basis, the numbers look very good, particularly on the operational front. So the revenues have come in at around 90 crores. That compares with the reading of around 20 crores. The same quarter last year wasn't so great. This time around, if you had just looked at the last quarter, you would know that, in fact, the numbers look quite good. Then in terms of EBIT losses as well, this time around, just looking at the EBIT, it was at around 26 lakhs is the loss that they delivered. That compares with the loss of around 5.3 crore. Approximately, just slowly, the company has been improving, and also in terms of profitability. Now, in fact, it's giving you a net loss of around 1 crore approximately, but that, in fact, compares with a much bigger loss. So those numbers look fairly good. We'll try to get the management to tell us more about it. Remember, they have 3 plants basically. We had the operational numbers that came out at Bilaspur, at Goa, as well as at Paradeep. We had the operational numbers on a quarterly basis, and in fact, they look quite good on a year-on-year basis. So I think we have with us now Mr. Srinivas Dempos, the chairman of the company, who joins us on the line from Panaji. Hi, Mr. Dempos. Thanks so much for joining in. Numbers looking quite good on a year-on-year basis. Though on a sequential basis, they're pretty much more or less stable. Could you give us first the capacity utilization at all the 3 plants? That's at your Bilaspur plant, your Goa plant, as well as your Paradeep plant.
Sure. The good news has been that the capacity utilization for this quarter ended has been much better, particularly in Paradeep and the Goa plant. And these 2 plants have clocked more than 70% capacity utilization, which was pretty low in the same quarter of last year. And the reasons are twofold. One is that we have been able to supply increased quantities to our major customers like Hindalco and Nalco. The only the only problem with capacity utilization was at the Bilaspur plant, and that primarily caters to the steel sector where it goes as a recarburizer, the CPC coke. And that has been reduced due to much lower prices that we are fetching for this particular sector.
Okay. Can you sustain your capacity utilization at current levels, or is there scope to increase it? How would you expect the capacity utilizations to pan out?
The guidance would be that we could end somewhere at 75% capacity utilization for this year.
All right.
And I'm speaking with a lot of confidence because there are enough orders for the coming quarter. And as of now, we have our order book is full till about beginning of March. So we still get 1 more month where we could further increase our capacity. That is the whole month of March. We have to still negotiate orders. We have received some new tenders which we need to fill in.
Yeah.
And hopefully we should be able to utilize the month of March too.
All right, that's quite interesting you say that, Mr. Dempos, because if you take a look at it, steel sector has been struggling, even Hindalco, given the aluminium prices, but you're saying your order book is good. So could you give us that number? What exactly is your order book currently
Sure.
at?
One thing I must say that though the order book is very good,
yeah,
the concern seems to be on the price front and the margins.
Correct.
As you rightly said, with aluminum at about less than 1,500,
true.
Many of the aluminum capacities are bleeding, and that's where the pressure on prices for CP coke continues.
All your 3 plants are currently functioning because there were some temporary shutdowns during
There were a few temporary shutdown in Bilaspur.
Okay.
As I said, Bilaspur plant, because it relies on the steel sector, hasn't been performing really well.
Okay.
But that's a small plant for us. It's about 25 to 30,000, which is very, very small compared to our Paradeep plant, which is the biggest, followed by Goa.
Okay.
And both these plants seem to be doing well. As I said, we have orders, just to fill you on the capacity, we have orders up to, and we will do similar numbers for the next quarter, based on confirmed orders in hand that we have received for the next quarter, with the whole of month of March remaining. So we still have to fill in our tenders and secure orders for the month of March.
So Dempos, Mr. Srinivas, then can we assume that the company is likely to turn profitable in Q4 considering the order book situation? Because right now the loss is only narrowed to 90 lakhs, and even if you account for the tax right back, the loss would be just about, what, 1.2 crores? So is there a possibility that you could be profitable by the March quarter?
Will depend on 2 factors. One is, of course, where we get really hit is the currency losses. Although much of it is unrealized, but as per accounting norms, we need to account for those. So it depends on where really the rupee dollar is. 100% of our raw material is imported. So that's factor number one. The second factor is when we secure orders for the future month of March, we really need to know where the raw material prices are heading. As of now, the concern on the raw material is with oil prices dropping, many of the refineries in China are also reducing their production. As a result of which, the raw pet coke, which is our raw material, we are getting of an inferior quality, number one. So we need superior raw material to blend it, which increases our cost. And the second factor is really the availability of good quality raw material. So if these two factors are taken care of, and if these are within our control, then probably there is a possibility we could turn profitable.
All right. I think the market likes what you're saying, Mr. Dempos. Thanks so much for joining in. All the best for the remainder of this year.